Welcome! We're about to take a deep dive into Module 4, all about subsidiary books. Now, if you're getting ready for exams with multiple choice questions, you are in the perfect spot. We're going to break down everything you need to know and really focus on the kind of tricky questions that you're likely to see.
So let's start off with a real-world problem. Just imagine a busy store. It's making hundreds of sales, hundreds of purchases every single day. Now, what if they tried to write down every single one of those transactions in just one giant notebook? It would get messy, confusing, and super slow, right? So how do accountants solve this kind of chaos?
Well, the solution is actually a pretty clever system. It's called the practical system of accounting. And the big idea is this. Instead of using one massive, overloaded book, accountants use several different, specialized notebooks. And these special notebooks are what we call subsidiary books.
Okay, so to really nail this for your exam, we have to get the language right. Let's start by defining the most important terms you're going to see.
So, what are subsidiary books, really? You might also hear them called books of original entry. That's because they're the very first place a transaction gets written down. By sorting everything into different books by type, all your credit sales go in one book, all your credit purchases in another, the whole system just saves a ton of time.
But what about those weird transactions that don't seem to fit anywhere else? Let's say you buy a new machine for the office, but you buy it on credit. Well, that's not a cash transaction, and it's not goods you're planning to sell. These kinds of unique transactions go into what's called the journal proper. Just think of it as the miscellaneous or catch-all book.
All right, next up is the trade discount. Now, this is a concept that pops up in exams all the time. It's basically a price cut that a seller gives you, usually if you buy in bulk. But here's the crucial part you have to remember. This discount is taken off the price before you even record the transaction. You never, ever make a separate entry for the discount itself. You only write down the final price you actually paid.
All right, now that we've got the basic terms down, let's dig a little deeper and see how these books actually work and why they're so incredibly important for a business.
So what's the big deal? Why use all these different books? Well, it all comes down to efficiency. It saves a massive amount of time because you're not writing out the same detailed journal entries over and over. It also lets you split up the work. Maybe one person handles the sales book and someone else handles the purchases book. This specialization makes everything run smoother, with fewer mistakes, and it makes finding a specific transaction way, way easier.
These are the main players you need to know. As you can see, each one has a very specific job. You've got the cash book for all your cash and bank stuff, books for your credit purchases and sales, books for when goods get returned, and of course, the journal proper for everything else that doesn't quite fit in the other categories.
Okay, pay very close attention here because this is a classic exam trap. The purchases book has a super strict rule. It's only for buying goods on credit. And by goods, we mean the stuff the business plans to sell to customers. So what if you buy those same goods but pay with cash? That goes in the cash book. What if you buy an asset, like a new computer, on credit? Nope, not the purchases book. That one goes in the journal proper.
And you guessed it, the exact same logic applies to the sales book. It's used exclusively for selling your goods on credit. If a customer pays you in cash, that transaction goes straight into the cash book. And what if your business sells an old asset, like a delivery van? Well, that's not your normal goods, so that sale would be recorded in the journal proper, not the sales book.
This next section is absolutely critical for your exam. We're going to put some similar ideas side by side and point out the common traps that exam questions are built around.
It is so easy to mix up purchases return and sales return. Let's clear it up. A purchases return, sometimes called returns outward, is when we send goods back to the person we bought them from. The goods are going out of our business and we send a document called a debit note. On the other hand, a sales return, or returns inward, is when a customer sends goods back to us. The goods are coming into our business, and for this, we issue a credit note.
Think of this table as your ultimate cheat sheet for the exam. You absolutely have to be able to match the right transaction to the right document. A credit purchase, that's an inward invoice. A credit sale, that's an outward invoice. A purchase return uses a debit note, and a sales return needs a credit note. You'll want to have this memorized for sure.
All right, here it is, your biggest MCQ alert. The most common trick question is all about knowing what goes in which book. So, for example, an exam question might say, a business bought office chairs on credit. A lot of people would jump to put that in the purchases book. But wait,
Office chairs are an asset, right? They're not goods for resale, so the correct place is the journal proper. Always ask yourself two things. 1, is it cash or credit? And 2, is it goods or an asset?
Okay, enough theory. Let's put this into practice. We're going to walk through a couple of exam-style questions to see exactly how these ideas are tested.
Go ahead and take a moment to think about this one. A company is buying office furniture, and they're doing it on credit. Where do you think this transaction should be recorded? Try using those two key questions we just talked about.
The correct answer here is C, the journal proper. Let's quickly break down why. First, the furniture is an asset the company is going to use. It's not something they plan to sell. That immediately rules out the purchases book. Second, the transaction is on credit, so it can't go in the cash book. And finally, it's a purchase, not a sale, so the sales book is wrong too. That leaves us with the journal proper, which is exactly where we record the credit purchase of assets.
Okay, let's try another one. This question is about the next step in the accounting process, moving the totals from the subsidiary book into the main ledger. So where does the total from the purchases book end up?
And the correct answer is A. To get this right, you just have to remember your basic rules of debit and credit. Purchases are an expense to the business, right? And when expenses increase, they are always recorded as a debit. The total of the purchases book is just the sum of all your credit purchases for that time period, so it gets posted as one single debit to the main purchases account.
Wow, we have covered a lot. So, to wrap things up, let's boil all of this down into a super simple summary of the absolute most important facts that you have to remember for your exam. This right here is your final checklist. Purchases. Book, only for credit purchases of goods. Sales book, only for credit sales of goods. Cash book, for any and all cash and bank activity. Journal proper, it's your catch-all, especially for buying assets on credit. Remember the difference between a purchase return and a sales return, and which document goes with which. And last but not least, a trade discount gets deducted first and is never recorded. If you can lock these points in, you're going to be in great shape for your exam.
And that wraps up the essentials of subsidiary books for your MCQ exam. But here's a final thought to leave you with. Now that you know how these books work, which one do you think would be the toughest to keep up with in a real business, and why? Would it be the cash book with its constant stream of transactions? Or maybe the journal proper with all its different unique entries? Thinking about how this works in the real world will really help solidify everything you've learned. Thanks for joining us, and good luck with your studies.